Hello and welcome to Financial Intelligence. In this video, I want to talk about gold prices. Gold has long been considered as the gold standard when it comes to monetary policy. Throughout history, most people have thought of it as a currency, safe haven asset, hedge against inflation, and much more. Therefore, it is logical to assume that gold prices should have gone up around the world as inflation has been picking up. For instance, this chart shows you the Consumer Price Index, or CPI for short, which is a proxy for US inflation posted on the US Bureau of Labor Statistics website. However, in reality, although inflation has been going up in the US, gold prices have been pretty flat. The main question is why gold prices have not gone up despite the fact that the government has been devaluing the US dollar by printing money. If inflation is rising and gold is the ultimate inflation hedge, then gold prices should have gone up significantly. In this video, I'm going to share with you 3 reasons why I believe gold prices have been stagnant amid rising inflation. If you like the type of content that I provide, subscribe to this channel and give this video a thumbs up, and also hit the notification bell so that you won't miss any of my future videos. Reason number 1, money inflow to cryptocurrencies. A new survey from deVere Group, one of the world's leading financial advisory firms, reveals that 2/3 of its millennial customers far prefer Bitcoin over precious metals as the ideal safe haven asset. That is not to say that millennials are opposed to gold, but that they see the benefit in a digital version of the precious metal far more useful and therefore valuable. In 2020, as the world went almost entirely digital, millennials were proven right. There is circumstantial evidence that some money has flowed directly from gold into Bitcoin. Institutions also appear to be making a decision to allocate some money to Bitcoin as a hedge against inflation. Gold fund flows are pouring into crypto, and the difference in ROI is substantial. The reasons behind this shift are very simple. There are downsides to gold that only cryptocurrencies can address. Gold is commonly counterfeited and can be confiscated. Bitcoin's distributed ledger ensures it cannot be duplicated or reproduced. And because it exists outside of a central authority and in cyberspace, it is outside of the reach of the law. Furthermore, gold cannot be stored or moved easily. In contrast, Bitcoin is never exposed, and moving it would take nearly zero effort, planning, and only a fraction of the cost. Reason number 2, money inflow to other commodities. More than any other commodity, the price of gold rises mainly because everyone thinks it will. For example, people believe that gold is a good hedge against inflation, and as a result, they're likely to consider buying it when inflation rises. There is no fundamental reason that gold's value should increase when inflation rises. It simply happens because everyone believes it to be true. Gold doesn't have any significant industrial demand. More than 80% of gold is consumed each year in the form of jewelry. Silver, on the other hand, as an example, is used very much as an industrial or commercial metal. It is commonly used in X-ray machines, solar energy systems, medicine, mirrors, automotive components, and silverware. That is one of the reasons why silver is up more than 70% in a year, whereas gold has been pretty flat year on year. Unlike gold, other commodities have commercial and industrial usage that create higher demand levels. For example, after the pandemic, we have been observing big moves in other commodities, including in silver, because of higher economic activity and growing demand in those commodity-dependent industries. The increase in demand for these commodities have attracted some of the funds that would have been invested in gold otherwise. Therefore, gold prices have been stagnant partly because funds are being redirected to other commodities that are considered better hedges against inflation. Reason number 3, central banks stopped buying gold. It is important to note that central banks are the largest holders of gold, and the price of gold largely depends on the volume of purchase orders placed by central banks around the world. One reason for central banks to store gold is that they can start selling gold on the market at any time when the economic situation deteriorates. Therefore, demand for gold from central banks tend to drop significantly when economies get weaker. For example, in the midst of the coronavirus outbreak, Russia's central bank surprisingly stopped buying gold and gave no official reason. Russia's central bank was one of the largest buyers of gold prior to the pandemic. This was an important development because Russia's central bank had been soaking up a large portion of the country's gold production. Note that Russia was not the only country to stop purchasing gold because of the coronavirus outbreak. The overall drop in central banks' demand for gold have played a key role in its prices being stagnant since the start of the pandemic. I hope that you liked this video. If you have any recommendation or suggestion, please add them in the comment section below. Don't forget to like this video, subscribe, and hit the notification bell so that you won't miss any of my future videos. Thank you and take care.